Welcome back to another Trade Journal video. This is Trade Journal number 32. And before we jump into this week's trades and talk about what I have set up for next week, don't forget to like and subscribe so you can stay up to date on all of my trades. And now jumping into some of the trades that I had for this week. So the first one is on Aapl. What I had on Aapl is a synthetic covered call. So what that is buying a deep in the money call with a long expiration. In my case, I have 470 days about till expiration, and then selling a weekly call against it. So for this week, I sold a weekly call on Monday the 1st. So that would be right here. And I sold that call at the 131 strike price right here at the red line for a max profit of $27. And as you can see, the market ended up kind of tanking and staying pretty far below, so I get to keep that full max profit of $27. Now, my trade for next week on Aapl, since the market did tank, I am going to sell a weekly call expiring next Friday on the 12th at a lower strike price. And this time I'm going to sell at the 128 strike price. My only concern with the 128 strike price is that if price ends up recovering and kind of skyrocketing past 128, I will need to roll this position because of the break even on my long call. And I'll do a future video kind of breaking down what a synthetic covered call is and how you can place those trades. But now looking at the next stock that I traded this week, Tqqq. What I had on Tqqq was a covered call. So I believe it was last week I got assigned on my cash secured put. So I own 100 shares at 103.75 right here at the red line. And I sold a weekly call expiring on the 5th or today at this blue line at the 103 level. And the max profit on this was $44, of which I closed it out early and made $43. As you can see, price stayed way below, so I get to keep the premium for this and nothing else happens. I do have a pretty large unrealized loss because I own the shares at 103.75, but my plan is to just keep on selling weekly calls against it until the price recovers. So my trade for this next week on Tqqq is selling another weekly call expiring on the 12th or next Friday, and I'm going to be selling that call at the 94 level. Right here where the blue line is for a max profit of $47. And again, kind of similar to the Aapl position, if the price starts to skyrocket back up next week and the market starts to recover, I will need to roll this position, and I will try to roll this hopefully for break even or maybe even a tiny loss so that I can bring it back up to where the stock value is. And now jumping into the final position for next week, I didn't have a position on Pltr this week just because the price tanked and I didn't really want to sell a call at kind of where my strike price was. But basically, I have a synthetic covered call on Pltr, and what I have set up for next week is selling a call at the $31 strike price, so right here at the blue line, for a max profit of $20. And although all of these profits are smaller than some past weeks, it's just a matter of continuing to sell against it, rolling as necessary, and then eventually once the price recovers, I'll be able to get out of this position, and I would have made money while the stock is still down. So my total profit for this week is $27 from Aapl and $43 from Tqqq for a total profit of $70. And right now I have about $104 set up for next week across Aapl, Tqqq, and Pltr. And as always, feel free to leave any questions or comments down below and I'll be happy to answer those. And don't forget to like and subscribe so you can stay up to date on all of my trades. And I'll see you all next week.